The dilemma of choosing between direct stock investments or mutual funds. ये ना कुछ similar है to whether I want to bake a cake or I want to buy a cake. So let me narrate a cute little story to you guys today. There was once a family, the Sharmas, right? So there was Mr. Sharma, Mrs. Sharma and their daughter Shruti. So one day, Mrs. Sharma's sweet cravings got the better of her and she was very excited. बहुत excitement में उन्होंने बोला कि यार केक बनाते हैं. श्रुति भी बहुत excited हो गई. So धीरे धीरे, very meticulously, they started following the recipe. And the moment they put the cake in the oven, the chocolate and vanilla scent of the cake started to fill the kitchen, right? So it was very exciting for them. But then when they took the cake out from the oven, it was slightly undercooked from places. The slice was pretty lopsided and the frosting lacked the professional touch. So Mrs. Sharma and Shruti were both pretty disappointed because of that. So this made the Sharma family sit and think about why the home-baked cake wasn't as good as a bakery-baked cake. And the first reason they could think of was an expert craftsmanship is required. Bakeries usually have skilled workers. Second reason was that the equipment and ingredients. So domestically, you might not have huge professional baking ovens at your disposal, right? The third reason they could think of was also time. हो सकता है इतना time हमारे पास शायद ना हो. So buying a bakery baked cake might be more efficient, right? So this is the same kind of analysis you have to do when it comes to direct equity investments that you can do by yourself, as well as versus mutual funds, right? So the very first thing that you need to understand is that professional expertise is very important. When it comes to finance, when it comes to research, mutual funds have fund managers, dedicated fund managers who are qualified, who are financial experts and whose 24/7 job is to manage those investments. They are paid to do so, just like a skilled pastry chef, right? The next point you need to understand is that research is very important. A professional fund manager is supported by his internal equity research analysts, right? Apart from this, what you need to understand is that time is again a very important factor. You might not always have time, whereas a fund manager and research analysts are paid to do so the same thing full time. The fourth point you need to consider is also the risk appetite. Direct stock investments come with a mortality risk. So that's something that you need to really consider. Another thing is the factor, the money quantum part, right? So to make an initially diversified portfolio on your own, you might need a decent sum of money. So, and you can start an SIP as low as like 5,000 or 1,000 rupees itself, right? And start your journey from there. So anyone who has a dilemma of whether I should build my own stock portfolio or I should go with, let's say, mutual funds as an instrument to invest in the stock market, my suggestion would be these are the 5 parameters that you have to consider, right? And if you manage to score a minimum of 3 out of this 5, right, by all means, go invest in direct stocks. If not, go find your pastry shop. Our lives are an outcome of the choices that we make. Make your financial choices wisely. Thank you everyone for watching this video. If you like such content, if you like reading more about finance, you can check out our blogs and you can subscribe to this channel as well.